So with that, I am really pleased to welcome Jeff Hood and Jamie Pugh from MMP. They're masked up, although they'll be doing different presentations from their computer. So they are partners with MMP and business advisors working with small and medium-sized businesses. And maybe I'll just ask them to chat a little bit about their role within MMP, and then from there we'll go into the presentation. You're gonna have to unmute yourself.
Just kidding, I'm on mute. Hi folks, most of you probably recognized me for a couple of years ago making obnoxious jokes at chamber lunches, and just yeah, I had a great time doing that. Kind of miss this world, so anytime I get an opportunity to come back and help out, I greatly appreciate it. My role with MMP is it's a lot of owner managed professionals and business clients, so these programs are right kind of right up my alley. I'll be honest with you that they've changed a lot. There's a lot that's come out, and probably as an accountant, there's a lot of stuff a lot of moving parts here. So I feel for you guys as business owners, because there's so many things out there. So hopefully we're able to at least get out there a few things that are there and get you guys thinking about a couple things. I know it's not an easy time for everybody, but this is what we have to work with. So hopefully we're able to help you. Right, see if there's something out there that's best for you, for your business, and hopefully get you some money back.
Hi everyone, I'm Jamie Pugh. I, like Jeff, work with owner-managed small to medium-sized business. I know when all this information started coming out, I was overwhelmed with how much we were getting on a daily basis, and so I can only imagine what you guys are all going through while still trying to operate your business. So hopefully we can provide you with some information to help make some decisions and at least let you know what's out there. Some of the things might be specific to your business, and we might not be able to address all of that today, but you can certainly reach out to us at any point, and we'll help you the best we can. So.
All right, with that, did you want to go right into the presentation then, Jeff? I know we had asked for a couple questions before starting today's session, so we're going to incorporate some of those questions, I think they did, into their presentation. But again, if you have any specific questions, feel free to use the chat function. And on to you, Jeff.
And share. The best part of this is on my screen, I don't have Spencer J staring at me.
I was waiting for the jokes to start. All right. So we'll get started here. Basically what we're going to be doing is going through the federal and provincial programs that are out there right now and any changes that have just come up. Again, if you have any questions, ask them as we go so that we can provide answers while we're going through that piece. So we'll start with the CEBA, the Canada Emergency Business Account. So this was a loan that came out quite some time ago that you were able to access through either your credit union or your financial institution, and it was a $40,000 interest-free loan, of which if you repaid it by December 31st, 2022, 25% of that was forgiven. So in order to qualify for that, you had to have a business number prior to March 1st, 2020. You also had to have a checking or operating account with that lender, but they've since changed that so that some of the small business or the proprietors were able to access this. So when you're applying for the loan, you can actually open up your bank account that day as well. And of course, the intention is that your business will continue. The thing that's worth noting here is that the deadline is December 31st, 2020. So that's coming up very quickly. And if you haven't applied, you should definitely reach out to your financial institution and or credit union to move forward with this. There's a couple things in order to be able to qualify for this. Your financial institution and or credit union will certainly help you with this process. But you had to have payroll in 2019, somewhere between at least $20,000 and less than 1.5 million. The other option is if you didn't have payroll in that amount, you had to have non-deferred expenses between 40,000 and 1.5 million. So a non-deferred expense would be something like rent, wages paid to a third party, you're looking at property taxes, insurance, things like that. So you're going to want to talk through this with your bank if that's what you're using to qualify, because some of the loans, some of the programs coming up, like the CEWS, can offset what your expenses end up coming out as. So you certainly want to talk to your, like I said, financial institution and or credit union when you're applying. And everyone that has a business number is allowed to apply for this loan. So the other thing, oops, I'll go back. The other thing that they've announced is the $20,000 increase, so moving it from 40 to 60,000. The positive about this is that 10,000 of that is actually forgivable as well. So it's definitely an attempt to try and help people out during this time. The one thing that's worth noting, which is not necessarily the top thing they're announcing, this is taxable income to you. So you have to record that in the 2020 year and pay tax on it at that time. The other thing that we want to bring up is that any of these programs that you apply for, you really want to keep track of your records so that if CRA is to come back and ask any questions or audit any of this, you have all those records on hand and are not trying to scrounge and figure out why you qualified, why you didn't. So for all of these programs, it's worthwhile keeping a little separate file just to say, you know, these were the expenses, this was my T4 summary from 2019, those sorts of things, so that it'll move the process along faster. So that's the CEBA. Then we're on.
Just one thing on the CEBA loan, where Jamie talked about that the forgivable portion becomes taxable in the year that it's received. The one thing you would be able to get is down the road when in 2022, when that loan is actually forgiven because you already paid tax on it, it would become a deduction at that time. I think there's, even in our office, there's varying opinions on that. So I think it's just make sure that you're talking to your tax advisor about that, and it's not a shock to the system when it comes up at the end of the day.
Can I just come in and just ask if we change banks, will it affect the next financing if they have a CEBA loan through RBC, for instance, if they just switch to, say, another credit union or something like that?
I can't imagine it would. Jeff, do you think? I'm not.
I don't think it would. I think the banks are the ones who are in charge of kind of administering this program. So I think you just have to be forthcoming with your institution that you've got one somewhere else, and that the new part might come to a new bank.
Yeah, you're not trying to apply for it at different banks. So the CRA will have all that information, and when you're applying through your credit union or bank, they'll have that communication with CRA to know that you still have one outstanding.
Okay, thanks.
Okay. So the 10% wage subsidy was one of the first things that came out, and this was for the period of March 18th to June 19th. So this was basically, you were able to decrease your source deductions for 10% of an employee's wage, up to a maximum of $1,375 per employee and a maximum of $25,000 per employer. So when you're looking at your payroll deductions, we all have CPP, EI, all of that. Those things are not what we're deducting. We are deducting from the provincial and federal tax only. And that's basically just your 10%. So you qualified for that and away you go. So what we're trying to figure out is how is CRA going to track all this and figure out T4s and those sorts of things. So when you're doing this, you have to complete a PD27 form, which is basically going to CRA to explain to them whether you chose this 10% wage subsidy or whether you used the CEWS, and how you calculated that. That way they'll be able to match your T4s to what has been sent in, and then you won't have penalties. Now this you can still apply for if, for example, you didn't qualify for the CEWS that is coming up. You can still apply for this for that period of March 18th to June 19th. The other thing that we're recommending is the PD27 form. Ideally, you'd like to get this in shortly after the December 31st period, just so that there's not a lot of questions coming from CRA as to why the amount you've remitted for source deductions isn't adding up to your T4 summary. So it's probably a good idea to get it in sooner rather than later. Again, you want to keep all your records for that. So next we'll move on to the Canada Emergency Wage Subsidy, or CEWS as we call it.
Can I just, sorry, can I just break in, and before
Sure.
we get too far down this line, because I did have a question that I kind of missed on the CEBA loans, or some comments. It was noted that, speaking with the RBC, that the two different loans, the 40K and then the additional 20K, would be treated separately. So not to communicate just the 40 and 60K. Do you know anything about that, if they're treating them separately, or?
At this point, we're asking people to reach out to their financial institutions for that, because CRA has not really provided any guidance on how those things are being managed. So your best bet is to contact them.
Okay, perfect. Thanks.
Okay, so this screen is basically showing the 9 periods that are currently available for the CEWS. So when it's referring to the dates here, the March 15th till April 11th, that's the pay period. It's not your revenue period, it's solely the pay period. And you can see periods 1 through 4 are under CEWS 1.0, and then periods 5 through 9 are under CEWS 2.0. And the reason for that is because there's different scenarios, and there's a sliding scale with the different sections. So you want to make sure to keep those separate in your mind. So this is just a reminder that your pay periods are listed 1 through 9 here. It is not your revenue periods. So this is a lot of extra work for our business people, because your pay periods are not necessarily falling when this is. So you actually have to physically go in and calculate every day to match these pay periods. So this is showing the difference between the CEWS 1.0 and the CEWS 2.0. So the revenue in CEWS 1.0 was, if your revenue was down by 15% in March, you qualified. And if it was down by 30% in April, May, and June, you qualified. So that's period 1 through 4. In the CEWS 2.0, it's on a sliding scale. So if you have any decrease in revenue, you qualify for this. Then we're looking at the revenue comparison period. And with this, under CEWS 1.0 and CEWS 2.0, when you pick your period, you have to use it for your whole time. So in the periods 1 through 4, you can look at, if you're comparing March 2020 to March 2019, that's what you're going to choose going forward. Or you're allowed to use March 2020 compared to the average of your revenue from January and February. And your revenue is going to be your basic stream of revenue, so it's not necessarily going to be one-offs. Like a CEWS payment to you wouldn't qualify as regular revenue, so that don't include that in your calculation. In the CEWS 2.0, it's the same, so you're looking at a March 2020 compared to a March 2019, and a March 2020 compared to the average of January, February. So like I said, so if you picked, I'm going to look at March 2020 compared to March 2019, and I'm going to use that for period 1 to 4. When I go into the CEWS 2.0, which starts in period 5, I can switch and use my May 2020 and use the average of January, February, or I can continue moving forward. But once I move past period 5, I can't keep switching. So pick 1 for period 1 to 4, 1 for period 5 to 9. And then the arm's length salary section, this is basically saying that you couldn't hire an employee after the fact and start paying them a huge amount to qualify for the wage subsidy in the 1.0. So the person had to be hired before all of this nightmare happened. And then in CEWS 2.0, you only need to have a salary beforehand if you were what we call a non-arm's length person, so someone that's a related party, a spouse, a child involved in the business, those sorts of things. So in this, the revenue goes by month, but the periods, you'll see like the pay periods, March 15th to April 11th, you would use the revenue for the March period. So you wouldn't use revenue from March 15th till April 11th. You would just pick the March revenue. Same for period 2, you would use the April revenue. So it's on a calendar month, the pay periods are not. We have had discussions, some people are actually, if they can afford to, they're waiting to determine which period makes the most sense for them, that they're going to get the most amount of money. So some people are waiting until the end of December to pick which period, which revenue period they're going to use to help ensure they're getting the maximum amount. Okay. So now we're talking about the actual subsidy and what you're receiving. So the CEWS 1.0, you can receive up to 75% of the salaries paid in respect of a week to a maximum of $847 a week. The CEWS 2.0 is based on a sliding scale. So if your revenue is only down by 5% versus if your revenue is down by 50%, obviously with 50% you would get substantially more than you would if your revenue was only down by 5%. But it is maxed out at $960 per employee. So we want to keep that in mind when we're going into how to actually do the CEWS 2.0. So the CEWS 1.0, if we're looking at the eligible employees, in order to qualify, you had to have, in your pay periods, which was the March till April 11th, that's a 1 month period, they had to have worked for 14 or more consecutive days within that period. Where the CEWS 2.0, everyone is eligible. Then the other item that you have to note is the revenue calculation. You can either use the cash form or the accrual form. And once you've chosen this, you have to stick with it for the entire duration of the program, periods 1 through 9. So again, that's something that some people are looking at. Your cash that you're receiving may show a less revenue decline than an accrual or vice versa. So you definitely want to calculate both to see what makes most sense for you. Okay, so now we're on to the CEWS 2.0 to talk about how it's looked at. There is the base wage subsidy, which I'll go into a little bit further in a minute. So this slide is basically trying to show you your periods. So you've got your July 5th till August 1st. Those are your pay periods in the claim section. The required reduction in revenue is basically saying anything greater than 1%, you qualify for this. So the reference periods are, again, like I said before, you can compare July 2020 till July 2019, or you could compare July 2020 to the average of January and February 2020. Again, if you're going to do this, you have to pick the same thing and keep moving forward with it. You can't flip-flop back and forth to whatever works best for you. Next is the top-up wage subsidy, which I'll go into a little bit further in a moment. But this is, you're looking at the same claim periods, which is your pay periods. And then you're looking at a 3-month average. So you're looking at your revenue from April, May, and June 2020 compared to April, May, and June 2019 as an average. Or you're looking at April, May, and June 2020 as an average compared to January and February as an average. And you're picking the one and you're moving forward with it. So the base subsidy is basically if you have a revenue drop up to 50%, this is where you would qualify for in here. The top up is if you have a revenue drop greater than 50%, you're going to add on to the base subsidy what you're eligible for. This is only for periods 5 and moving forward. And again, it's up to a maximum of $960 per employee. So the base rate, which we'll go through first, it's showing you the different pay periods, and you have to note that for period 5, it's 1.2, but by period 9, it's dropped down to 0.4. So you need to keep track of these when you're doing your calculation. So if we look at, for example, period 5, you had 20% revenue drop. You times it by your period 5 base rate, which is 1.2, and that gets you your base subsidy of 24%. So again, you'll see in the different columns here, it's showing how the base rate is going from 1.2 down to 0.4 in period 9, and your revenue decline is based on your month's revenue during those periods. So that gets you your percentage that you can then multiply by the wage. So if you're looking at, for period 5, where we had a 20% decline, times the 1.2 is 24%. You times that amount by the employee's salary for that week to get your base subsidy amount that you're eligible for. So in period 5, the $270.96 is what you're eligible for at the time. In period 5, you'll notice the $1,129, that's the maximum amount that you can use the base subsidy on per employee per week for the entire periods. So you'll see in period 8, there's $1,300. This is just thrown in there just to say you can't exceed the $1,129. So if you actually ran that calculation out, the $316.12 is capped out on that employee salary of the $1,129. So that's basically how you're going to look at the base subsidy. If your revenues, unfortunately, have decreased more than that, then you're going to move into the top up that you're going to add to your base subsidy. So 50% or lower, you don't get any of the top up because you qualify in the base subsidy. 50.01 to 69.99, you get 1.25 times the top up revenue drop less 50%, and we'll go through an example. And if your revenue drop is 70% or higher, you're looking at a top up rate of 25% for the periods of 5 to 9, to a maximum of the $960. It is worth noting that CRA is not allowing you to round. So if you're at 69.99, you're stuck in that 1.25 times top up rate. You can't just bump into 70 because of rounding. So this is an example here. So you've got for the 70% or higher of revenue drop, your top up rate is the 25%. So that one's pretty straightforward. You have $282.25 that you get to add to your base for that employee. If you're in the second section, you can see your revenue drop was 60%. So you take 60% less the 50% to get your 10%, times 1.25 is your 12.5 times the salary amount to get the 141.13. So this top up is for businesses that have had a revenue decrease of 50% or more. How are we doing? It's a lot of numbers, it's a lot of acronyms, sorry. Okay, so the transition rules, this is only for period 5 and 6. Basically what this is allowing is you're allowed to choose CEWS 1.0 or CEWS 2.0 for these periods. And it's definitely worthwhile running through the calculations here because one of them could be substantially higher than the other, and it only works for period 5 and 6. Now the deeming rule, so for CEWS 1.0, the deeming rule was if you qualified for period 1, you automatically qualified for period 2. If you qualified for period 3, you automatically qualified for period 4. The CEWS 2.0 is a little bit different. So basically what happens is if you've calculated your revenue reduction for period 4, being 45%, and then period 5, your revenue was only down by 35%, you can deem to choose the period 4 revenue reduction for your calculation. The only thing is that you have to calculate period 5 because if I move on to period 6, I can't still use period 4. You can only use the previous period. So you're basically doing all of the calculations anyways, but you're allowed to pick and choose which one is best for you for your subsidy that you'll get refunded. So this slide's basically just saying, again, calculate everything, but you can pick and choose. So you'll see in period 6, it was only down by 30%, but you can choose the period 5, which was 35%. You can't go back to period 4, that was at 45%. So the deadline for this application is January 31st, which happens to be a Sunday, so it's basically Monday the 1st. I wouldn't leave it until then. I would definitely want to get doing this as soon as you can. Number one, it would help to get the cash flow in your hands. And number two, it's quite a bit of work to move through this. and you probably will have questions along the way. So the sooner you can start, the better. I will note that the CEWS payments are taxable, unfortunately, and can affect some of the other programs that you're involved in. So you definitely want to keep that in mind, because some businesses can qualify for a substantial amount of money coming, and you want to be prepared so that you're not getting hit with a big tax bill at the end of the year. And the other thing, they're looking at extending this till June 2021, but we, of course, don't have any, it's not set in stone yet, so we'll keep you posted on that along the way. The one thing I was going to mention about the CEWS is CRA has already started calling people on it to basically ask them certain questions, like when was this employee hired, what was their pay for this period. I think it's their way of just getting started on trying to figure out how they're going to review these things. Again, we've recommended that you keep all your records handy, and you can work through this with CRA. They know that this is new to everyone, and when they came out at the beginning, they were saying, oh, there's going to be all these penalties if people are fraudulently doing this. Yes, if you're making up employees and doing things like that, they'll come after you. But their intention is not to punish people for mistakes that have been made. So I feel like they're going to be working together with you to try and get things fixed. And if you made an error, they'll look at ways of getting it repaid and working with you. So I would not move forward in fear of these things. I would move forward with doing your best to try and figure it out. And hopefully it helps through some of these hard times.
Okay, great.
Any questions?
I do have a question for you that we're getting is, how do we deal with source deductions that have been remitted on employees' income? Is there a rebate for that? And also, what is the proper accounting treatment when we receive the wage subsidy?
So the source deductions that have already been sent in, CRA would be refunding you for the CEWS. For the 10%, you can actually deduct from your source deductions going forward. So that should eliminate that problem. For the amount that you're receiving for CEWS, I think it's going to be dependent on what your accountant's preference is, but I like to keep that as a separate item. So I would create a new account in my trial balance and call it wage subsidy, so that you can track this and keep it separate from your regular business items, so you can actually see how your business is doing if the CEWS hadn't have been there. Some people would offset it against salaries expense. Some people would put it in revenue as another item. It really is up to you what you want to do, but it's nice to keep it separate so you can actually see your business overall.
Thanks. Can I ask a question? That was my question that she had asked on my behalf. I'm still a little bit unclear on the source deduction side. So what we've been doing is we've just been paying our employees and submitting the source deductions as we normally would. And then when the wage subsidy comes in, I just offset it to my wage account. So with the source deductions, is there something, am I supposed to be paying full source deductions on the wages that my employees have been receiving? If not, what's the trigger to get that back?
You are supposed to be paying the source deductions, because when they file their tax return, they have to have enough tax deducted on their behalf. The wage subsidy is a revenue for the business outside of that. So you do your source deductions as normal, and your T4s will be reflective of what you had source deducted for each employee. The wage subsidy it's really like an other revenue item outside of that.
Okay, so I don't have to change anything then. We're doing it okay, except for maybe reallocating that income that came in.
Yeah.
Okay.
Any other questions at this time? All right, I'm going to move on to Jeff.
Favorite part of everyone's day. I'm an old man, so I gotta put my glasses on. There we go. Thanks, Jamie.
Jeff, just before you start, there was some stuff in the chat, if people are following, just related to nonprofit organizations and the new $5,000 grant. I know you're going to probably talk about it a little bit, the bridging grant, but just if people want to follow along in the chat, again, if you have any questions, just put it in here and we can give you an opportunity to either speak to it or do the question. So sorry. Go ahead.
Yeah, spoiler alert, we are going to talk about that in a couple minutes. So I just want to add a little bit to Jamie's comments and kind of what we said earlier is these programs change so much, and I know personally, right, it came out and CEWS 2.0 came out in the summer, and if we all remember those days, life was not too far off normal for us. We were down to one active case for a lot of that time, so I don't think it was necessarily it wasn't as big of an issue for us then. And my guess is that there's a lot of businesses out there that were kind of making do, and they were getting by, and they actually didn't need to worry a whole lot about CEWS 2.0 or even 1.0. So I think the encouragement is now there's probably some money left on the table, and as things change over the next few weeks here, I think it's important that people's records are up to date and that they actually go back and stop and take a look, because there might be $5,000 to $10,000 to $20,000 sitting on the table, sitting there because their revenue went down even 10-20%, and they were able to make do and do okay. But it wasn't that 30% that was in the original, the CEWS 1.0 side of things. So I think from don't want to speak for Jamie, but the encouragement that I think would be go back and right, really, oh, that's Jamie's thumb, this is my thumb, is to stop and take a look, and not to sound like a geeky accountant, but get your books up to date, because that's probably the easiest thing that you can do, that you have to do anyways, to hopefully get a little bit of money back. All right. Sorry, I'm taller than Jamie and my head's too big. So I'm gonna briefly go over the CERB, right? The CRB, which is the old CERB. I'm not going to go too far deep into it, but I think it's important because this encompasses some of our self-employed people who are, we'll say gig economy, or are sole proprietors that aren't necessarily incorporated. So you're similar to the CERB. It's $500 a week up to a maximum of 13 weeks from September 27th, 2020 to sometime in September. September 25th. Thank you, Jamie, because I can't see the whole screen right now. So, right, 26 periods, of which you can actually apply for 13 of those. Of course, I think after the CERB, there was probably a little bit of concern about taxable income and people having to pay tax come next April when they have to do their tax return. So CRA has withheld 10% withholding tax on this, so it's only $450 a week. Yep.
Sorry to interrupt. The one thing I was just going to say is the 13 weeks don't have to be consecutive. So if you need it for a certain period of time, you can apply for it for that period and then move forward and get it again later. It doesn't all have to be in a row.
Jamie, do you want to go on?
That's it.
So a little bit further to that, so it doesn't renew automatically, so you have to apply for it every 2 weeks. And like Jamie said, right, there's some planning that goes into it a little bit, because I think there's a lot of people that are going to be short cash. So you might have some work lined up, so that might be a 2-week period where you're not going to apply for it, and you're going to kick the can down the road a little bit when you actually need the money. And you can retroactively apply for a period 60 days after the period actually ends. So to be eligible, you are either not employed or self-employed. More of that. For reasons due to COVID-19, or you had a 50% reduction in your average weekly income compared to the previous year due to COVID-19. You had to not be receiving any other government or non-government benefits, including EI, workers' compensation, long-term disability, those kinds of payments. And similar to CERB, you had to have earned at least $5,000 in 2019, 2020, or within the last 12 months before applying. This is when I had to make notes and I didn't. Before applying from either self-employment, net self-employment income, or maternity or parental leave. The interesting thing here, right, is it had to be here's the only time where they actually talk about net self-employment income. So that's gross revenue minus your actual expenses as well. All right, so the 50% reduction is calculated based on either 2019's average weekly income or the past 12 months average weekly income. And the combined income for the period must be less than 50% of the average weekly income of 2019. So if your average weekly income for 2019 is $1,000, your average weekly income for the claim period has to be less than $500 for you to be able to look at claiming this benefit. And in this case, self-employment may also include non-eligible dividends. So if you are incorporated, we talked a lot about being a sole proprietor. If you are incorporated and you're using dividends as a remuneration strategy, this is something that can be factored in as well. And I know when CERB first came out, this was a hot topic, and within CERB they changed this as well throughout the course of time to include that. The one other thing I will add on this is the 50% reduction of revenue for someone who is self-employed. Any of the information that we've read doesn't specifically stop and say whether that is net income or whether that is gross income. My gut feeling and speaking with some colleagues would be that this would be gross income, because sometimes, right, your expenses kind of flatline and it's the same one period over the next. But if your revenue decreases, that's when you really start to feel it. So it's something that the CRA hasn't given a great amount of guidance on, from what I can see, anyways. But I think you would be able to easily justify that if you had a reduction of gross revenue, that you would be eligible to claim for this type of expense. So of course, this benefit is taxable, just like pretty much everything has been so far. And the interesting thing now is that if you make more than $38,000 a year of net income on your 2020 tax return, for every dollar you're over $38,000, they will claw back 50 cents of this benefit up to the point of repaying all the benefit that you actually received. Right, so if your net income is $40,000, then you would be required to pay back 50% of the amount over $38,000, which would be $1,000. So depending on your situation, what you might actually have to stop and consider is utilizing your 13 weeks properly, and using that ability to go back 60 days to apply for a period. Generally speaking, what happens is that those types of benefits are taxed when you receive them, right? So if you apply for a benefit in January back to a December 2-week period, you're not going to receive that payment until sometime in January. And based on any of the prior history that we have, you would end up being taxed on that in 2021. So it might be important that you're actually stopping to consider it. Obviously, you have to look at your own cash flow and know what's there. And it might be that this is a short-term loan, and realizing you have to pay back a certain amount when you do your taxes in 2021. But those are some of the things that you probably need to stop and actually consider when you're actually applying for this. And like I said, you know your records, know where your income is going to be, because that's going to be important as you go and decide whether you're going to apply for this benefit. So, the new rent subsidy program, not a lot out on it at this point. Still, it's frustrating, I think, for a lot of people, because this has been something that a long time. The former the Circa one that was out there was an okay program, but it was very tedious. You had to get your landlord on board. It was very difficult to navigate through. So this one will hopefully be a little bit better. As of right now, it hasn't gone through legislation. So this is kind of a summary of what's been released, but it's not necessarily, this isn't necessarily what it's going to be at the end of the day. So it's rent and mortgage support up until June 2021 as of right now that have suffered due to the pandemic. It'll cover a maximum of 65% of eligible expenses for the organization, which have had a drop in revenue of 70% or more. Organizations that have seen pre-COVID revenues fall by less than 70% will be eligible for a gradually decreased level of support, which we'll go into on another slide. Organizations that are temporarily shut down to mandatory public health orders will also be able for a 25% top up in addition to the 65% subsidy. So they like their top ups. So qualifying expenses are commercial rents, right? Lots of people are in a triple net basis. So if there's property taxes, property insurance, and if you own your own building, if there's any interest on the mortgages, then you're able to factor that in, less any amount that if you're subleasing any space that you'd have to factor or take that amount out so that you may or may not qualify because of that. Any sales tax of this, you're able to claim back on your GST return anyway, so you wouldn't include that amount in the expenses. Oh, okay. And so, yeah, Jamie just brought up a point. If there's PST on the other expenses, then that wouldn't be included either. So these eligible expenses would have to be under agreements that you've entered into before October 9th, 2020. Right, there's some people out there that use a cottage or a house as something that they actually pay rent on for part of their business, and that would not be eligible to be used. Nor if you have a related holding company that you rent from an operating company to a holding company to. Also, if you are using, if you're a landlord and you're using you're deducting rent or deducting interest primarily for rental properties, you would not be able to claim this amount on the rental expense side of things. And as of right now, they've capped the period amount, so which would be the 4-week period that we'll talk to in the next couple slides, of 75% per location and $300,000 per group of affiliated entities. To meet the criteria, you must meet one of the following, where you have a payroll account as of March 15, 2020, or a business number as of September 27th, 2020, which is when the program is retroactive to. So here's the quick summary of the scale that you're using. So the scale and how this program is set up is very similar to the wage subsidy program. So I'm not going to go into as much detail as Jamie did. But just to know the fact that if you lose more money, you're going to get a higher subsidy. If you lose less money, you're going to get a subsidy. It just may not be as much. And if you look at the the bottom, where you've got a 1 to 49% reduction, you still may qualify for some kind of subsidy. So it's important that you look at that and understand. The first programs that came out were much more defined. You had to be losing 30% of your revenue to be able to qualify, where these new programs actually open it up to a lot more people and account for the fact that you've lost a little bit of money or some money, but you still may need that extra help going forward.
Jeff, can I just clarify? So the rules for this particular, this hasn't actually been approved quite yet, right? Is it open now, or is it?
That's right. No, it hasn't been passed into legislation yet.
Okay. And I think Colette has another question, and maybe we'll ask her to ask that now if she wants to.
Oh, sure. I was just going to ask on the sort of the legalities or the eligibility of if we rent from someone who is not at arm's length from us, do we qualify for the rent subsidy?
No, if you're paying to a non-arm's length party, you wouldn't qualify for the rent subsidy. It would have to be someone that's arm's length. So more just to illustrate your reference periods, they've actually set up the reference periods that they're the exact same as the wage subsidy. So you can either now take the general approach of revenue from one period in 2020 over the prior period in 2019. And they've taken an approach where they've expanded it to kind of give you some options because there's overlap within the qualifying period. So, for period 8, you could use October's revenue comparative, or you could use September's comparative revenue. You also have the approach similar to CEWS that you can use the current month's revenue that you pick, and you can actually then compare it to the January and February average of revenue once again.
If you were also doing the other program, would they have to be the same? Would you have to use the same, like if you use the general approach for the CERS one and then the alternate approach to the other one, or do they have to be on the same?
I don't think they have to be on the same, but I think oftentimes it's going right because this scale is based on revenue. There's a good chance you're going to use the same approach anyways. And it's kind of, I'm not going to say it's a blessing at any time, but if you haven't applied for this, I had a lot of clients that are like, I want to do this now, and I need to get this going now. But so you don't always see what the best approach might be. Where now, if you're able to do some of this retroactively, you can see what the best what the best months to be able to actually use are, and play out 4 or 5 months at a time to be able to go and do your application properly. So on to some of the Manitoba government support. So this is to me is another one where it's like the CEWS program that we were talking about. Is I think in the summer when people were getting hired back, maybe there's a chance that people didn't put as much effort into looking into this program because things were going okay. But I think now it's something that you probably have to stop and look at. Is this 50% wage subsidy for new or rehired employees that you've paid between July 16th and December 31st, 2020, right? So they have to be hired after July or on or after July 16th. You can get the maximum of $5,000 subsidy per employee up to 20 employees. So you could get up to $100,000 out of this type of program if you brought people back to work within this time period. It's one of those programs where it was designed to get people back to work, and so so sometimes people might have been you might have been rehiring people one way or the other, and this might just be something that's there that can help you get through the tough times that may be coming ahead. So like I said, this is for private sector and not-for-profit organizations. It had to be a newly hired or hired back employee. Unfortunately, business owners and immediate family members are not available to qualify for this program. And the deadline for this, my star is taken off. So the deadline is December 1st for this. So it's kind of a funky program if you ask me, but there might be something there that you can take advantage of, but really you've got 2 weeks to have a look and sort some of that stuff out. So you're amongst a few other things. The basic ones are that you need to have a valid business number, a bank account, an email address. Employees must have been registered in good standing with the corporation or the company's office. If you were incorporated, but not required if you're a sole proprietor. And you have to now be able to provide proof of wages by February 1st, 2021. So back to harping on accounting, record keeping is very important. You have to have your payroll records up so that you can be able to supply this, because as we get to on the next slide, you may or may not get any money until you actually, or you probably, if you haven't applied yet, you won't get any money until you provide that information to the provincial government. The kicker for this is you're not able to combine any other government subsidies for wages with this program, right? So if you're on the summer job program or the wage subsidy, the CEWS from the federal government, you weren't actually able to utilize this program. So for those that haven't done either one of those, this is a time now where you may have to stop and look, okay, which is the better option for this period of time to be able to go and apply for, because if you haven't applied for either one of them over the last 4 months, there's a good chance that you might be able to get something out of this. The one thing that it doesn't include is the smaller temporary wage subsidy, which is the $13.75 that you could get back per employee up to $25,000 that Jamie spoke of earlier. So if you applied for this program before November 9th, you would have received a $1,500 advance per employee. And then the remainder is sent on the submission of all your payroll documents by February 1st, 2021. So the hard part about that right now is that you kind of have to, if you're going to the end of December, you have to wait till the end of December to be able to file all that information, and you play a bit of a waiting game to be able to actually get that money. If you haven't applied, obviously we're going to be past November 10th, so you won't receive anything from the provincial government until you actually get these payroll documents submitted. And I'm not sure if we're sending any of this information out, but there's the website that answers or that summarizes this program. It'd be interesting to know, even if you just fire it in the chat to Carolyn, how many people have actually applied for this program? Because I know, speaking with my clients, I haven't had a lot of people look at it. So even just for rough information, I'm sorry to Carolyn to bombard you, but if they have applied, it'd be interesting to know how many have. Or I don't know if you guys know offhand how many people or what kind of uptake this program has had.
We do know a few people that have done this prior to the November 9th, and so they would be eligible for the advance for the $1,500 per employee. I'm not sure. I know we have a couple staff people online, so perhaps they can put a poll together, but I do know of some. I don't know the total uptake for it.
Chuck, since you're on the line, hopefully you're paying attention because I'm putting on you a spot. Is this something that's had a fair amount of uptake?
Yeah, there has been. Mostly, I would say restaurant and retail have taken advantage of this, would be the biggest users of this program. I want to say the province will say they've had in the neighborhood, and I'm just trying to go back on my numbers, maybe 10,000 jobs as a result of this. So it has been one that's utilized, but mostly through retail and the restaurant industry.
I do have another question for you from Kim. Kim, maybe I'll just do it, but if you have anything to add, that they were told by the provincial subsidy representative that if you were eligible for CEWS, then you didn't qualify for the back to work program. That is, yeah, so that's what you were basically saying previously. Okay. And
it's not so much if you qualified, because you're right, there's a good chance you would qualify for both. It's which one you actually apply for.
Okay.
So I have another follow-up question on that. Can we do a bit of a hybrid where when we're calculating the wage subsidy, if we would get less for that particular employee that we've hired, can we leave them out of the wage subsidy and use the back to work program for that employee?
That's a good question. I don't have the answer to that off the top of my head. I think you need to be careful, right? By going. I think if you're going with one program, you go with one program as opposed to by employee.
Okay.
I could see you more going a little bit by month, right, or periods, right? That you apply for in certain periods and then apply for it otherwise. But I think if you go some employees this way and some employees that way, you might have a tough time.
Okay.
So the bridge grant that was just released on Monday this week. Chuck, I know you were very involved with this, so feel free to jump in or correct me where I've misspoken. But this is the grant that's available to businesses that have been temporarily told to cease operations or close their public accessibility within Manitoba due to the public health orders that have come out. From what I read, if you're ordered to close but you're still providing curbside or delivery, you would still be eligible. However, if you're ordered to reduce capacity, you would not be eligible.
I would check on that as well, because I think the province is looking to be pretty open on this, and I know Jordan Sisson is probably on the call as well. So I would suggest apply anyways, and at least you'll find out what kind of the levers are for the province. And again, with some of these other programs, the GAP program, I know there've been some concerns. If you collected GAP, you wouldn't be eligible for this. You are allowed to collect both.
And but you have to apply for this as well. You're not automatic.
You have to apply for this one, yes.
Yeah.
But if you do collect this and it does go into January, it does roll over to another $5,000 automatically.
Okay. So yeah, it's a grant. It's not a loan or a potentially forgivable loan, but of course it is taxable, as everything seems to be right now. So this is available for small and medium businesses under most structures, NPOs, charitable organizations, and you have to have an active business number as of November the 9th. All right, so there's just a couple of quick examples that come into play there. And for more information, there is the website that I'm sure a few of you have already looked at a couple times, and Chuck probably has memorized or tattooed on his forehead at this point. And just to finalize up the Manitoba Gap Protection Program, of course this is closed, as Chuck has said. This was the one that was originally extended to businesses as a forgivable loan, and now has just been converted into a grant and is no longer repayable. I think this is the one where it was going to be forgivable if you ended up not or you collected other programs, and that has gone by the wayside and has just turned itself into a grant. So that's the summary of what we've got. Obviously, there's lots of stuff that's out there. Lots of it is you probably heard some of this, but hopefully it's at least refreshed your memory as to what programs are actually available to you and what may actually apply to your business or someone, even a business that right, to be able to help them out. They're not straightforward. They're not simple programs. So I think it's important that you're consulting with an advisor just to make sure that you're understanding the programs that are in play, to see if there is anything that actually can be effective for you to help weather the storm over the next little bit. Personally, as I said before, I think there's probably some money left on the table that can be found probably with a little bit of effort there to go and do some calculations and see what's there right now. I think I speak for all of us. I think we wish that there was a magic bullet to fix all this. We're kind of right. This is the world we're living in. This is what we're given to work with right now for programs. So do the best that we can within the programs that are out there, and hopefully everyone's maximizing them as much as possible.
Thanks, Jeff and Jamie. We would take a couple more questions if anybody has any. I did want to make a couple of comments. We've sent out a few things in our email. We have stuff on our website as well. There are a few other programs and things that you might want to check out. One of them is Innovation Canada, and we have a link on that, which is a link to a whole bunch of other grant information and what you might be able to look for. So you might want to look at that for some other programs as well. I didn't officially welcome Chuck here, but Chuck Davidson is the president and CEO of the Manitoba Chambers of Commerce. And he has been working to make a lot of this happen on the Chamber's behalf from a provincial level. So we appreciate that. I don't know, Chuck, if there's anything that you wanted to mention. We kind of asked you on in case we were focusing on the main programs that we had today, but certainly if there's anything else that you thought that we should mention and that business should know with regards to what the programs and supports that are out there.
Yeah, no, I think, and I appreciate you guys doing this today, and I think it's always good to get as much information out about the programs as possible. So I think this was a great overview by MNP on this. Just some other things that we're working on as well. So one of the things that would have came out earlier this week is that there's also a $50 million fund that's looking at long-term COVID recovery. So it hasn't been launched yet, but the Manitoba Chamber will be partnering with Economic Development Winnipeg and establishing that. And again, looking to help supports and programs for Obviously, small businesses that have been mostly impacted as a result of this. So we're looking at, a number of different programs, things like Digital Main Street, which could potentially help some of those small businesses that don't have an online presence, shop local campaigns, buy locals, anything that we can do to help support those small businesses. So we're going to be looking at different ideas. So you'll see more stuff coming out from us, probably as early as next week. And again, continue to, support the network and get this information out as much as possible. And if there's challenges that your business members are having, go through the Brandon Chamber. They'll come through us. We'll make sure that we're raising your concerns at the provincial level.
Thanks for that, Chuck. Yeah, just to stay connected, we're doing stuff through the social media channels, signing up to our e-news and emails to stay up to date. And certainly every story that we're getting, I'm sure Chuck is getting sick of us and his team, because we pass along all of the impacts that we hear and the stories that we hear. So we encourage you to continue to do that, because it really does impact and shape the programs and supports that are coming from government as well. So please continue to do that. We have a couple other things coming up in the next little while. Our speaker series with Chris Turcott tomorrow. If you're not, we hope that you have tickets already, because we sold out. We have no more spots available. So we look forward to that. We do have a workshop on Talk So They Listen, which we're going to talk about unconscious bias and diversity. And so that's on the 26th. We have our coffee coming up, and we are looking to do more of these type events to really get the information to you. So stay tuned. If you do have any suggestions for some information and clarity on stuff, we encourage you to reach out as well to Members Information Center, or sorry, Member Information Center, to members at brandonchamber.ca, and she will collect those, and we can start to offer more of these things. If you need more information, we can do it as a group like that. So thanks so much for coming, everybody. And until next time,